Hey everyone, and welcome back. We're doing a deep dive into Market Wizards today. It's this book chock full of interviews with legendary traders,
Yeah,
and
yeah.
we're gonna try to unpack some of their secrets to success.
Yeah, it'll be interesting to see all these different, like approaches and
And
styles.
maybe pick up a few tips for ourselves along the way.
Yeah, exactly. And
Hmm.
you know what I think is so interesting
Yeah.
is that, it's not like there's a magic formula. Like it really is a combination of, you know, market understanding and risk
Hmm.
management and psychology and all this
Yeah.
stuff.
Exactly. And speaking of the book, it kicks off with the story of this trader. They just call him the unnamed trader. And he starts out as a commodity research analyst.
Yeah.
And his analysis is spot on. He predicts some major price moves.
Right.
But here's the catch is his department forbids trading.
Oh, wow.
Mm.
So kind of like Michael Marcus.
Exactly.
We talked about him last time.
Yeah, he had that same restriction.
Seems to be a trend.
So what does he do? He opens an account at a different firm. And get this, to keep it a secret, he uses a public phone in the basement to make his trades.
Wow, that's dedication.
Yeah.
What were the big takeaways from his early trades? I mean, did that pan out?
So he had this incredibly detailed analysis of the cotton market going back decades. And he noticed that only 2 seasons in all those years were truly free markets,
Yeah.
without any government programs influencing the prices. So he thinks, okay, this is it. This is the pure data.
Yeah.
But he overlooked something crucial. Even those 2 seasons weren't enough data for a reliable analysis.
Yeah, any more?
Yeah, and he learns that the hard way. He goes short on cotton based on his analysis, and the market tanks, wiping him out. Luckily, he hadn't risked a ton of capital at that point.
Yeah, but still, you never like to see that happen.
It's like the market reminding you to stay humble.
Yeah, definitely a wake-up call.
So that wasn't his only learning experience. He had another turning point when he met this guy, Steve Krenowitz, a precious metals analyst who swore by technical analysis, fundamental versus technical.
Yeah, I'm familiar.
But what's interesting is how it challenged our unnamed traders. Initial skepticism towards technical analysis.
That is interesting, like somebody so focused on fundamentals. How did they react to technical analysis?
Well, at first, he was like, charts, how can those predict anything? But seeing Kronowitz consistently nail his calls using technicals, he started to think maybe there's something to this.
Yeah.
It's like, a doctor using only one diagnostic
Well,
tool.
that's a good analogy.
You need different perspectives to get the full picture.
Exactly.
And that idea of blending perspectives, it becomes a recurring theme as we go through Market Wizards. But let's talk about risk management. Our unnamed trader this time, it all starts with a trade involving plywood futures. And the market was in a weird place. The government set price limits, but they were below what normal supply and demand would dictate.
So like an artificial market? Sounds risky.
He thought he had it figured out. Saw an opportunity, went long, even structured a spread trade to limit his risk.
Yeah.
But he didn't fully grasp how the market would behave. Long story short, the market crashed. Panic, and he managed to escape with a profit. But it really shook him up.
Wow. Yeah, I can imagine. Sometimes you can have a profitable trade, but still have a gap in your understanding of the risk.
He was so close to a devastating loss, all because he underestimated the risk.
It's all about those market mechanics.
You got to understand them, not just rely on surface-level analysis.
That absolutely.
Yeah, it was a tough lesson, but a valuable one for sure. That plywood trade really solidified the importance of discipline and risk control, which you see a lot in Market Wizards, actually. It's a common thread through all these different trading styles. Take Marty Schwartz, for example. He always talks about knowing your uncle point.
That predetermined exit point where you just got to get out.
Exactly, like an emergency brake.
Yeah, you might not always need it,
Yeah.
but you're glad it's there when you do.
Thinking back to that plywood trade, even a profitable trade can go bad if you don't manage the risk.
Oh, for sure. It's not just about setting stop losses either. It's about understanding the potential consequences. Like what could really happen.
Yeah, you have to think about different scenarios and plan accordingly.
Exactly.
It's not just about making the right trades, but protecting yourself when things go wrong. And as you read through these interviews, you see that. Disciplined risk control is like a hallmark of these Market Wizards.
It's how they stay in the game long enough to win.
It's fundamental to their success.
Seykota, another trader in the book, he has this great quote. Cut losses, ride winners, keep bets small.
Simple but powerful.
Yeah, consistency is key.
Speaking of consistency, there's another fascinating aspect that Market Wizards gets into, the psychology of trading.
Oh yeah, it's huge.
The book introduces us to Dr. Van K. Tharp, this research psychologist who studied what separates the winning traders from everyone else. He even developed this test called the Investment Psychology Inventory. to pinpoint these characteristics.
So it's not just about strategy. It's about mindset, too.
Exactly. And what's crazy is some of the most crucial traits he identified were things like having a balanced personal life.
Really?
Yeah, a positive outlook, taking responsibility for your outcomes.
That's interesting.
Like you might think, what does my personal life have to do with trading?
Right.
But it makes sense when you consider the emotional toll of trading.
Yeah, if your life's a mess,
Yeah.
it's going to affect your decisions.
It's like you need that solid ground beneath your feet before you take a leap.
I like that.
And here's another thing from Dr. Tharp's research. There's no one-size-fits-all approach to trading psychology. He studied two incredibly successful traders. One was all about mechanical systems, and the other was more intuitive.
So like two totally different approaches, but both successful.
Yeah, and that's the crazy part. Despite their differences, they shared some fundamental traits. Like they both had developed and rigorously tested their models of the market, and both had a strong sense of purpose.
So they both like spoke the same language, even if their dialects were different.
Exactly. And when you think about the psychological traits you need for trading, it all connects. Managing emotions, staying objective, adapting to changing conditions.
That's where the mental fortitude comes in, like being able to cut your losses, even when it feels wrong.
And resisting the urge to chase every trade.
Yeah, patience is key.
It all goes back to risk management and discipline.
It all ties together.
And as we continue with Market Wizards, you'll see this theme of psychological resilience come up again and again.
These traders have mastered the mental game.
It allows them to handle the ups and downs.
I remember a quote from the book. I can't remember who said it, though. Something like, trading is 10% technical and 90% psychological.
It's probably different for everyone.
Yeah, so the point is,
Yeah.
your mindset is crucial.
Absolutely. And speaking of mastering the market, Market Wizards also talks about recognizing market trends and, even more importantly, spotting market hysteria. There's some great insights from James Rogers in the book. He's known for identifying long-term trends, believes that's where the real money is made, spotting those major shifts and writing them for years.
Not just days or weeks.
Exactly. It's a longer-term perspective.
He's all about fundamental analysis, right?
Examining global economic shifts to find those markets.
Looking for long-term growth.
Exactly. And he says once you identify those trends, you got to stay with the trend.
But how do you know it's a real trend and not just a temporary thing?
That's where his advice about market hysteria comes in. He says to look for hysteria to see if you shouldn't go the opposite way.
So when everyone's panicking or getting greedy,
Yeah, that's when you got to pause and think.
is there something everyone's missing?
It's like our unnamed trader's cotton mishap. He got caught up in the hype.
And it cost him.
Exactly. It's classic herd mentality.
And Rogers takes it even further. He says be open to buying or selling anything, as long as the fundamentals are there.
So many people limit themselves.
Yeah, like I'd never buy that kind of stock.
Yeah, but Rogers says flexibility is key.
You got to explore different markets.
Break free from those preconceived notions.
Find the opportunities others miss.
It all goes back to having a multifaceted approach,
And being adaptable.
which we see throughout these interviews,
It's about recognizing you don't have all the answers.
and being willing to learn from others.
Stay curious and adaptable.
That's what makes Market Wizards so great. It's not a rule book,
Yeah.
but a collection of stories and insights that make you think differently.
There's no one right answer.
You have to find your own framework for making decisions.
The market is always changing.
You gotta adapt.
It's complex and dynamic.
But there are multiple paths to success.
Yeah, it's all about staying flexible and open-minded,
Yeah.
you know? And speaking of different perspectives, Market Wizards has this great example of how to leverage the experiences of other traders. There's this guy, Tony Saliba, a really successful options trader, and he talks about using other traders as indicators.
Oh, wow, that's interesting. Yeah, it made me think about the importance of mentors, or at least people whose work you respect and can learn from.
It's like that saying, if you're the smartest person in the room, you're in the wrong room.
Exactly. Saliba says if he sees a trader he respects taking a position, it kind of reinforces his own analysis. But if that same trader is doing the opposite, it makes him pause and reevaluate.
like a second opinion from an expert.
Yeah, but it's not about blindly following. It's
Right,
about
no.
incorporating those insights into your own decision-making.
Makes sense.
It's like recognizing that experience and expertise have value. They can give you a different angle on the market.
Definitely.
But it's not just about seeking validation from others. It's also about having the humility to admit when you're wrong. And Market Wizards has this amazing story about Marty Schwartz,
Ooh,
who actually struggled as a trader in a decade before he found success.
10 years.
Yeah, it makes you wonder how many people give up right before their breakthrough.
What was his turning point?
It was actually two things. First, he finally found a methodology that clicked for him. For years, he'd been using fundamental analysis. But it wasn't until he embraced technical analysis that things started working.
So he found a style that fit his personality.
And his way of thinking about the markets.
It's all about finding what works for
Yeah,
you.
exactly. And the second part of his transformation was his attitude. He realized he became a winning trader when his desire to win overshadowed his desire to be right.
Oh, that's interesting.
It's subtle, but so important. It's about acknowledging that you'll be wrong sometimes.
Yeah, we all make mistakes.
And that's okay. The key is to learn from those mistakes.
And keep improving.
And for Schwartz, a big part of that was risk management.
Mhm.
He was super disciplined about setting uncle points, those predetermined exit points.
Right, to limit his losses.
And get this, he'd even reduce his position size after a string of wins.
Really? Even after wins?
Yeah, not just after losses.
That's interesting.
It seems counterintuitive.
Yeah, you'd think you'd want to ride that momentum.
But he recognized that his biggest losses often came after his biggest wins.
Oh, wow.
Like he was anticipating that overconfidence.
That makes sense.
By scaling back, he stayed disciplined, kept his focus on the process, not just the profits.
So he didn't let success go to his head.
Exactly. You got to stay humble.
The market can change in an instant.
Never let your guard down.
And, this brings us back to one of the main themes in Market Wizards: continuous learning and adaptation. All these traders, no matter how different they are, they all share that trait.
They're always trying to get better,
Refining their approaches, seeking new knowledge.
adapting to the market,
It's a mindset of continuous improvement, always looking for a better way,
and never being satisfied.
and not being afraid to challenge their own assumptions.
In an experiment.
It's like embracing the journey, recognizing that trading is like life.
It's a process.
You're always learning and growing, and that's one of the most inspiring things about Market Wizards. Success isn't about some secret formula.
Or being born with talent. It's about hard work and dedication.
And a willingness to learn.
And adapt. So, as we wrap up our deep dive, what resonated with you the most? Any insights or strategies that stood out?
What really got me was how these principles, like risk management, discipline, resilience, they go beyond trading.
Yeah, they apply to anything.
Any endeavor where there's uncertainty.
And you're striving for success.
Exactly.
It's a reminder that we can learn from the world of trading and apply those lessons to all areas of our lives.
So true.
So stay curious, stay adaptable, and never stop learning.
Sounds like a good plan.
Who knows, maybe one day we'll be reading about your success in Market Wizards.